All right, what do you make of this? The Dow and the S&P hitting new record highs with so much domestic uncertainty and also global and macroeconomic uncertainty out there. What does that say about investors?
Well, macro uncertainty is a permanent condition of investing, and every high we've ever hit has come in the midst of some uncertainty. It may feel like there's more pronounced uncertainties right now, the geopolitical, the monetary, fiscal. But I do think that investors at this point should be very used to the fact that markets move on profits and profit growth, and profits sometimes come even in the midst of big uncertainties.
All right. So, by the way, your word of the day is humble. But if you're looking at earnings estimates, they're anything but humble. We're on pace for 3 straight years of double-digit earnings growth. So exactly what's humble right now?
I'm recommending investors be humble, and it's actually about the very thing we just talked about, this state of the economy. To the extent people are going in with an assumption that the economy is going to fly this year, or very certain that the economy is going to tank this year, humility would say we just don't know, because I can make very good intellectual arguments for why there's headwinds for the economy and tailwinds. Humility in our investment posture allows us to have a more sensible portfolio. That's where things like asset allocation come from. That's where things like rebalancing come from. They come from being humble.
Okay. Your pick for us today is Blackstone. Can you give us the elevator pitch? Because there's something else we want to talk to you about. We've been teasing it all morning long. Why Blackstone right now?
Look, I think Blackstone is just this leadership name in asset management, fee-based business, cream of the crop, with the various themes in private markets, from private equity, private credit, real estate, infrastructure. It's a fee behemoth, continue to be an asset gathering machine, and the business model is really attractive for investors. It's a great price entry right now.
All right. A lot of talk about the Fed and who's going to be the replacement for Jay Powell. You're good friends with Kevin Hassett. You've been friends for many years, but you're actually praying that he's not the Fed chair. Explain this. A good friend, someone you say you've worked with and benefited from, but you're praying he's not the Fed chair?
Well, look, Kevin and I have spoken together many, many times. He's been in my offices, and yes, we've had a collegial professional relationship for a long time, and I respect Kevin a great deal. But I do believe that the Kevin I've known, in terms of his commitment to market principles and independent thinking, is different right now. The way he's defended tariffs versus what he's done throughout most of his career. It causes me to believe that markets will have a hard time believing him to be an independent voice. I think somebody like Kevin Warsh is going to be better taken in markets. And I say that with the utmost respect for my friend Kevin Hassett.
Okay. So you're seeing Kevin Warsh as having more independence. I mean, what's the thesis behind that? Both of them would be Trump picks. So why do you think Warsh would have significantly more independence than Hassett?
Yeah, whoever gets the pick is going to be a Trump pick. That's right. But I think Kevin Warsh's career has shown independent thinking, the way he wrote concerns about QE in the past,